Hey, welcome back. It's Jason Walter here. In today's housing market update, I have a ton of updates to share with you today. So if you get any value out of this video whatsoever, then please hit the like button. Also, if you're thinking about buying or selling a house outside the greater Sacramento area, then go to homeandmoney.com/Jason to get connected with a great real estate agent in your neck of the woods. And of course, if you're looking to buy or sell a house in the greater Sacramento area within about a half an hour drive of Sacramento, then feel free to reach out anytime. With that said, let's go ahead and get started with today's housing market update. And according to the Mortgage Bankers Association, or the MBA, mortgage applications dropped overall by 3.1% from 1 week earlier. That's for mortgage apps for purchase applications plus refis. The seasonally adjusted purchase index was basically flat from 1 week earlier. However, on a year-over-year basis, the purchase index was actually 24% lower than the same week 1 year ago. And by the way, I'm not putting a lot of weight into year-over-year comparisons, at least for the next few months. Around this time last year, lockdowns were lifted and our housing market took off big time. Therefore, lots of home buyers submitted loan applications for home purchases this time last year. So when comparing housing market stats now to 1 year ago, the numbers are going to be down quite a bit. In contrast, if we were to compare April and May this year to April and May last year, the numbers would be artificially inflated. This is because the housing market and the economy were on lockdown April and May of last year. All right, so I hope that makes sense, but leave me a comment if you have any additional questions regarding that. So going back to this report from the MBA, or the Mortgage Bankers Association, according to Joel Kahn, who is the MBA's Associate Vice President of Economic and Industry Forecasting, the average loan size actually decreased from a record high of $418,000 that was set in February to $407,000 last week. The average contract interest rate for a 30-year fixed-rate mortgage with loan balances of less than $548,000 decreased to 3.15% from 3.17%. So rates dipped, but not enough to cause an influx of mortgage applications. In other housing market news, homeowners are almost $2 trillion richer after the first quarter of this year. According to a new report from Corelogic, homeowners with mortgages saw their equity in their houses jump nearly 20% in the first quarter from a year earlier. Average equity gain of $33,000 per borrower in Q1 2021 was the highest in at least 10 years. In contrast, the negative equity share, meaning the homeowner owes more on their mortgage than their home is worth, that made up only 2.6% of all mortgages in Q1 of 2021. That was the lowest in over 10 years. The number of properties in negative equity decreased by 450,000 from Q1 2020 to Q1 2021. The continued acceleration of home prices to record levels is why home equity has increased so greatly. Shocker. The National Association of Realtors noted a few weeks ago that the median home price rose 19% year over year to almost $342,000. Both are record highs. Record high home prices were also set in California as well. So the median home price in California surpassed $800,000 for the first time in April. The chief economist of Corelogic stated the following: double-digit home price growth in the past year has bolstered home equity to a record amount. This reduces the likelihood of large numbers of distressed sales from homeowners who emerge from forbearance later in the year. Stay tuned regarding that because I'm going to be sharing the latest mortgage loan forbearance numbers here in a few minutes. Corelogic also released the cities and states with the highest and lowest negative equity share of mortgages, so let me share that with you right now. The states that had the highest share of homeowners with negative equity were the following. So Louisiana led the nation by a long shot with 8.3% of mortgages with negative equity. Louisiana was followed by Iowa, then Illinois, Oklahoma, Connecticut, Arkansas, North Dakota, New York, Kentucky, and Delaware, all above the national average. It's important to note that these are the states that experienced the lowest home price appreciation in the nation. In addition, Corelogic stated that these states are also at a higher risk for foreclosure and distressed sales. On a nationwide level, in general, the West had the lowest share of negative equity, with most states below 2%, whereas the East Coast experienced rates slightly higher than the West. The different metro areas of the US also vary greatly by their negative equity share. So, for example, San Francisco had the lowest negative equity share of 0.7%, and that was followed closely by Los Angeles, Denver, and Houston. The highest negative equity shares by far were located in Chicago and Miami, which both had rates of about double the other metros listed. In regards to mortgage loan forbearance news, Black Knight actually reported today that the share of homeowners in forbearance dropped below 4% for the first time since this pandemic started. The number of homeowners in forbearance dropped by 61,000 this week. There are now just over 2 million homeowners in forbearance, which equates to 3.9% of all U.S. mortgages. And approximately 530,000 plans are still scheduled for quarterly reviews for extension or removal over the next 3 weeks, and that could further lead to additional forbearance exits. In economic news, consumer prices are rising at the fastest rate in over a decade. The Bureau of Labor Statistics, or the BLS, reported that the overall consumer price index rose by 0.6% in May on a seasonally adjusted basis, following an increase of 0.8% in April. So over the last 12 months, the index has increased 5%, and that was the largest 12-month increase since August 2008. Excluding the volatile food and energy components, the CPI increased by 0.7% in May after an increase of 0.9% in April. It is the largest increase during the past 39 years. Other items noted in this report that I found very interesting that I want to share with you today were the following. So household furnishings and operations index increased 1.3% in May, its largest monthly increase since January 1976. The index for used cars and trucks also increased almost 30%. The index for new vehicles rose 3.3% over the past 12 months, its largest 12-month increase since the period ending November 2011. And if you're thinking about going on vacation and renting a car, then it's probably going to be a lot more expensive as well. So the index for truck and car rentals more than doubled over the past 12 months, rising 109.8%. In other news, mortgage interest rates rose up slightly, but according to Freddie Mac, the average 30-year fixed-rate mortgage is still hovering just under 3% on average. Freddie Mac's chief economist summed it up by saying the following: despite the stronger economy, the housing market is experiencing a slowdown in purchase application activity due to modestly higher mortgage interest rates. However, it has yet to translate into weaker home price trajectory because the shortage of inventory continues to cause pricing to remain elevated. Honestly, the last time I checked, we needed approximately 2 million more houses to be listed for sale in order to have a more balanced real estate market between home buyers and home sellers. So although we're seeing some early signs of a potential slowdown in a real estate market, we do have a long ways to go. If you enjoyed watching this video, then please hit the like button. I greatly appreciate that. And also consider subscribing as well. I post videos about how this pandemic is affecting our housing market. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day and look forward to seeing you on the next video.